continue to jam with us when the honor. Hold on. I'm sorry. It's still jamming. Y'all remember that? Remember that song? Who knows that song? What's the name of it?
Me.
Put it in the chat. Put it in the
It's,
chat. Who knows that song? Put it in the chat.
it's Frankie, Beverly, and Maze. Before I let you go.
All right. No, what's this? Yeah, that you right. You right. You right. You right. You right. You right. You got it right. You got it right. All right. All right. We got the little trivia, music trivia going on tonight. Thank you. Thank you for participating. We're gonna get started because I know it's late on the East Coast. So we thank you. It's not about Beverly, but it is about knowing what time it is. And so we won't keep you too long. So I just want to make sure that y'all are having a good time while you're with us. Thank you for all of the guests that are chiming in for the first time. We do kindly ask if y'all can hear me just a little bit. I'm going to turn it down just a little bit so y'all can hear me.
All right, it's 5 minutes after the hour. Good evening, everyone. Everybody on the East Coast, what's going on? What's whoop whoop?
Hi, woo.
Y'all good? Y'all good? I know the sun is down. You know we still got some sunlight over here for at least another 90 minutes. So y'all go ahead and show that envy. It's all good. I see we got a few people. Pastor Jay, Tracy, a couple of iPhones there. I know one of them iPhones is Jacqueline. How you doing, Miss Jacqueline?
Hi, I'm good.
All right, I'm pretty sure it says we got 13 people, but I only see five. So that means a lot of people don't have their cameras on. So if you don't mind turning your cameras on, I'd really appreciate it. Um, I wanted to be able to, do a couple of icebreakers real quick. The people that know me know I'm a little bit of a nerd, and tell you a little bit about this call tonight. Is going to be a special call because over the past month, it's been Life Insurance Awareness Month, and this has been a fantastic month in sharing information about life insurance and helping people understand not only what they have, but helping them to understand how to get something that'll be able to protect themselves and their families, their assets, and their financial legacy. So this call tonight is kind of like an opportunity to have a midterm, if you would, right? After we've had a few people jump on the calls every week, a lot of questions that have been shared have really made these calls invaluable to a lot of people. A lot of people getting new policies, a lot of people changing their policies because of the new information that they've been getting. So I'm really excited about tonight because I've been collecting a lot of the questions that everyone's been asking over the past few weeks. And tonight we're just going to be able to just, run through a few of them and just discuss them in depth. Is that okay?
Okay.
All right, I see Diane's iPhone down there. Now, no disrespect to the ladies, but whenever I see a gentleman on the call, I'm going to acknowledge him. Diane's iPhone, who's the gentleman with you with the wings on his chest?
That's my husband.
All right, thank you, husband, for being on because, sometimes I'm a little lonely out here. I'm a little lonely. So, welcome. What's your name, sir?
Rodney Lee.
Yes, sir,
Hey,
Mr. Lee.
Rodney. Welcome, Rodney.
All right, and he got some bass in his voice. So if my voice gets a little lower, because I got to be the alpha male. Don't y'all worry about that. That's all
Oh,
good. All right,
my
don't y'all worry.
word. Bless the
So
Lord.
I want to be able to do a quick icebreaker, if you would. I'm going to start. Let me see if I can do a quick poll so I can get a good understanding of who's on the call tonight. And again, if you're not on camera right now, I don't see you in the screen, but you should be able to knock out this poll. So let me go ahead and let me know if everybody sees the poll. Can you see the poll?
Yes.
Yes, I see the
All
poll.
right, you got 60 seconds to knock this out. Let's do it.
What is your
Oh, Jesus. What's on that?
No pressure. No pressure.
No, 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 no pressure.
Just 60 seconds.
Oh yeah, we did.
Oh, wait a minute. Do, 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 do,
Want some
do,
Jeopardy
do.
music?
Yeah, you got to have it. It's highly necessary.
My
All right.
word.
If you're just now joining us and you don't see the poll on your screen, let me know and I'll make sure you get it on there. It's just a few preliminary questions. It's actually going to be 20 questions in total tonight, but we're not going to go through 20 questions in detail. It's just an opportunity for us to be able to test our knowledge and see what we can do to make sure that at the end of the day, you know what you got and we can help you get what you need. So let's go ahead. We got 5 seconds. No, I'm going to have a couple of extra ones. We have somebody jump on there. Let me see what we got. Oh, so, somebody got this information through carrier pigeon. Which one of y'all used a carrier pigeon to find out about this call tonight? That was
I
supposed to.
did.
You know what? I sat there looking at you, knowing it was you. I knew it. All right, I'm gonna go ahead and close the poll. Thank you all so much for participating. Let me see. Let me share the results real quick. What we got right here. So, what is the level of experience? And every, you know, we got. I know nothing about life insurance. Don't worry, you will before the end of this call tonight. I have. Hey, Sid. Oh, okay. Thank you for joining. Yeah, okay. I have learned a few things along the way. That's great. Let's see if we can learn a little bit more. We have a couple of agents, and me and Miss Baylark are the senior agents on. Have you attended any of our workshops? 57% of you said yes. So thank you so much for joining. And for the new people, welcome to tonight's call. You just happen to be jumping on a night where we're actually going to go in depth on some of the questions that we've had over the few weeks. How did you hear about this? Cassandra says, carrier pigeon. We're going to make you take that test again. You failed. Most people text messages and phone calls. Do you currently have life insurance? Look at that. I got an outstanding group. Everybody has life insurance, but only 7 out of the 14 people answered this question. So we hope we have better responses when I do the actual polls. And who or what do you feel needs the most protection? Your family, your house, your business, or your legacy? Everybody agrees with family. So guess what? That's what we're here to make sure our family is taken care of. And so the next opportunity we have to share this information is going to be in the form of a quiz. And in that quiz, again, we're just only going to highlight a couple of the questions out of that quiz because we're not trying to be here all night. But the idea behind the quiz is so you can see some of the questions that people have been asking over the past couple of weeks. And tonight we have our resident guru tonight. Her name is Miss Cheryl Baylark, looking all good down there in her, you know, in her glasses.
Shark.
What's going on? All right. So this
Yeah.
next somebody, let me see if I can mute somebody out. Who's that? Got some background noise?
All right, I got it. I'm good.
No problem, no problem. So if you don't mind, I'm going to go ahead and administer this quiz and see how much y'all know. So everybody that's not on camera, let me know if you can see the quiz because I would like for you to input your responses as well. This quiz is going to be 4 minutes, Mr. Lee. 4 minutes. You ready? Because I'm going to time it. Wait a minute. When was the last time y'all took a test and it was timed? If you're an agent, it was when you got your license. So you don't act like it was that long ago. So let me know if this is on the screen. Let me see here. Test your knowledge. Ready? 1, 2, 3, go.
Okay.
Types of insurance.
Lifetime universal.
Barely.
Oh, is it more? Okay. Only your benefit values from the policy.
Miss Dorber, you don't see it. Let's see. Can you come on camera? I think you might have to come on camera to see it.
No, that's true.
Do you see it now?
That's fast. You can benefit
Okay, let me see what's going on with that.
the primary live long term.
Miss Dorber, you're the only one that doesn't see it? Let me see.
Yeah, maybe it's my screen options. I see you and I see the participants, but I don't see the quiz. But that's okay. That's fine.
Well,
if you go down to the bottom of the screen, Ms. Dorber, Johns, go to the bottom of your screen. I don't know where your commands are. It says polls and quizzes. See the controls. You see that at the bottom or at the top?
There you go. The genius is on. All right.
Are you able to see any controls? Do you see audio and video?
Money market.
Yes,
All
the audio.
You can scroll all the way to the right. Probably had to move it all the way over to the right. Sometimes the controls are hidden. Well, welcome everyone. Y'all popping in like popcorn. Listen.
Pop, 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 pop. Okay. All right. We got 1 minute, 40 seconds. How's the test so far, everybody?
Depends on.
They're like, it's late. We ain't here for no test.
You know, it's true. But I said it in the advertisement. You know, it is what it is, you know. All right. Ms. Baylard, she gets the wonderful opportunity to answer all your intense questions. You know, that's right. I want you to be in Zen mode, Miss Baylark. Be in Zen mode. All right, we got 2 more minutes to go. Let's see what we got.
You can.
Who will it be? Who will it be? Drum roll. Is it gonna be the power couple? Is it gonna be RB? Who's gonna be Ty? Who's it gonna be? Who's it gonna be? Miss Virginia. Who's it gonna be? We see Monifa's iPhone. Who's it gonna be?
Oh, no.
Hey,
What's wrong with you?
paid up means your policy is paid up for a year and you no longer have
No.
yeah, that. Okay. Which finance product are subject to
This is fun. I get the rare opportunity to be the one administering the test since I'm always the one taking them, seems like.
You got to go.
Oh, this is Miss Baylark. We're definitely going to talk about question number 3.
Okay.
Unless you have a living.
I don't see it.
You know, I think I'd have to pop it back up there one more time so you can see it.
Yeah, I see this little guy.
Do you see a guy?
There's the guy. So
You might have to scroll down.
yes, you do.
Don't miss nothing.
I'm sorry, but y'all know I'm corny. I had to put that guy in there because I thought it was hilarious when I saw that picture.
Have to wait.
All right, so we're at minute 4. I'm going to give it a few more seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, put down your pencils.
Oh.
All right, so can you guys see the results right now?
Yes, I see it.
All right, so this is a wonderful opportunity to find out exactly where everyone's head is. And Miss Baylark, did you get a chance to get to do the test, Miss Baylark, yourself?
No, but I don't see the results. Am I missing something?
I don't.
I don't see the results either.
Yeah.
Oh,
I got this.
Yes, I do.
There we
Yes, I
go.
do. I see it.
There we go.
Okay, I just want to make sure we got it. So, all right, first off, I am so glad. Question number 1. Miss Baylark, you can take over after this, but I got to talk about question number 1. Is that okay? I'm so glad none of y'all
Well, you know what?
selected
You can just tell me the questions and then I can answer it. We can do
I
it.
will
I'm
do
gonna
it.
put them in the chat, you guys. Give me 1 second.
What are the 3 primary types of life insurance? Do y'all see that?
Yes.
Okay, so what most everybody only had 4 people that responded, but one person said burial, pre-need, and final expense. And 3 people said whole life, term life, and universal life, which is the correct answer. Thank you all for not saying GoFundMe. Right? GoFundMe is not life insurance.
False.
All right, let's take a look at number 2. Only your beneficiary benefits from your policy after you die, right? And everybody, most of the people said that was false. That is false because living benefits allows you to be the beneficiary of your own policy while you are still alive. Okay, that's great. Okay, and then what are your primary living benefits? Long-term care, accidental death, dismemberment. Okay, so that one I'd like Miss Baylark to cover. Can you see that, Miss Baylark? Number 3.
You know, I think I clicked it. I'm so sorry. I think I clicked it off.
Well, that's okay.
Check the chat.
Okay, so the question is, what are your primary living benefits offered free in today's life policies? Right? We had 3 out of the 4 people say long-term care.
I thought it was that. I'm sorry.
accidental
I
death
thought
and
it was that.
We got somebody. I think Jacqueline is burning me out over there. I got to mute her. Okay. What are the primary living benefits offered free in today's policies? Most of the people responded long-term care, accidental death and dismemberment, and I forget whatever the third one is because I don't see it on my
Terminal
screen.
illness.
Let me see. Terminal illness. Okay, there we go. Can you see that now?
I'm
What do you
putting them
think,
in the
Miss
chat.
Baylark? What do you think about that response?
Okay, you said long-term care,
The
right?
question is, what are the primary living benefits offered free in today's life policies? And mostly
Okay.
I got one person said critical, chronic, and terminal illness, but mostly everyone else said long-term care, accidental death and dismemberment, and terminal illness.
Okay.
Yeah.
The terminal, critical, and chronic are the three that are offered that are free. When we talk about long-term care, although long-term care is separate, there is long-term care that's part of the chronic benefit that's offered. And that's if you have like Alzheimer's, Parkinson's disease, that comes in, it can be used as a long-term care. Accidental is just accidental insurance, and generally that's what the company maybe that you work with that issues insurance for you, that a lot of people don't realize it's just accidental unless you get hit by a car or bus. It's of no use to you. Was there another one part of that?
Yeah, no one selected child term rider, overloan protection, or waiver of
Yes.
premium. So that's good.
Mommy,
That's good.
it's a dinosaur.
It is a dinosaur. Long term, all those old policies are dinosaurs. You are absolutely right. You know, somebody's been paying attention. So let me look at question number 4. Which financial products are not subject to taxation? Are not subject to taxation. We had everybody chimed in, but the majority of the answers were money market accounts. They selected certificate of deposit, mutual fund, cash value life insurance, money market account. Ms. Baylard, which financial products are not subject to taxation out of certificate of deposits, mutual funds, cash value life insurance, or money market accounts?
It's just so.
Actually, it's cash value life insurance. And the cash value life insurance are part of a life policy that many people don't realize exists. Life insurance as it stands today, there are 3 main functions. There are the living benefits, there are the death benefits, and then of course there's the cash value. All the other accounts that were listed are taxed. And those are taxed now because you have to pay the taxes within the year, or capital gains tax.
Or capital gains. Absolutely. Man, I love this. This is good stuff. I hope y'all writing this stuff down or at least putting it in your mental. You're not saving it? Of course, I'm recording the call, so it's all good. Can I get life insurance without taking a medical exam? I've been getting that question a lot. What do you think about that, Ms. Baylard?
Well, actually, you can. What they do is actually depends on your age. It depends on whether you're male or female. And they look at something that's called an ABS report, and that's an overall general medical report. And if that looks pretty good, then you don't have to take a medical exam. If you have some other ailments or you're on medication and they see there's something on that report, then you're going to have to take a medical exam. Generally, young adults don't need a medical exam because they're still young and healthy. So if you have any young adults and they don't have any type of coverage, this would be a good time to talk to them about that.
I love it. There was actually 2 answers to that. If you answered yes, you're still correct. But as Ms. Baylard said, it does depend on your current condition, male or female. So if you answered depends on the amount of coverage or whatever else is needed, then you were correct as well. And let's take a look at how much life insurance do I need? Looks like everyone said all of the above. Depends on your current financial situation, depends on the number of people you are protecting, and it depends on the value of the property you are protecting. So everybody got that question right. So moving on. All right. So
well, wait.
Okay, she says wait.
One way to find out, yes, wait a minute. All those questions are correct. But one way we help our clients to find out how much life insurance they need, we use a method called the dime method. And the dime method takes all of your debts. It takes your income times 10, any mortgage or rent that you have, or if you're planning for education, we total that up, and that lets you know how much income. That lets you know how much insurance coverage you need.
All right. Debt, income, mortgage, and education. I like it. The dime method. I love it. Okay. Once I buy the policy, will I ever, it's supposed to be ever need to change my insurance coverage? Most people said yes, you should have your coverage reviewed regularly. And some people said no, the coverage you get should cover you no matter what. So the correct answer would be yes, of course. Ms. Baylock, you'd like to touch on that a little bit?
Yes, what we do with our clients, every year we do an annual review, because from year to year, people's lives change. Sometimes when we put people into policies, we put them in certain policies because of their finances, where they're able to convert. But when they're doing better in life, then it's a good time to go up and change your policy. So it always depends on the situation. Every year, you should always have a policy review so it can be adjusted.
I love it. I love it. Isn't it good to have a resident guru? It's great. How about what does fully paid up mean? So, Ms. Baylark, I've been getting that question lately, especially when it comes to conversations with IULs. And, you know, they want to know about what is a fully funded IUL and what will cause an IUL to lapse. So they ask the questions, what's fully paid up? Your policy is paid up for the year. You no longer have to make payments. That's the correct answer. And it says you have made all your payments. I got to open the screen up because it's too small. Okay, let me see. You have made all your minimum payments and you no longer have to make additional payments. So the last one is absolutely wrong, because if you're making minimum payments, your policy will lapse. Would you like to cover that a little bit, Ms. Baylor?
Sure. When we set up a policy, you're paying the cost of insurance, but you have to overfund the policy. One of the good resources for having a cash value policy is you want to save. So you always want to overfund it. You want to put more money into it so that money is saving. And when they're taking out for the cost of insurance, you want to take that into consideration. Because if you don't continue to make your payments and say you stop, your policy can go in effect for a while, but they're going to go into that cash accumulation. And then after a while, you're going to have the cash accumulation. Now, when Mr. Tony talked about paid up, we can design a policy where most people pay up until they're age 65. Because one of the things about the life policy, it can be a supplemental income for you. So if you pay up to the age 65, we calculate up to that age, and then we tell you how much you can get every year from that policy. And that's being paid up. But you never want the policy to lapse. The purpose of it is to grow your money and grow it in compound. I'm probably ahead of that, but yes.
I love it. I love it. All right. Well, look, we're moving right along. Okay. Which financial products are subject to market fluctuation? So the selections were mutual funds, index universal life, variable universal life, and of course, stock, your stock, right? So which financial products are subject to market fluctuation, Ms. Baylark? Mutual funds, index universal life, variable universal life, or stock, or stock?
Which are subject to.
Which are subject to it, yes.
Well, it's easier to say which one is not. And that's
supposed to be a trick question.
And it should be universal index, because the universal index is where you can participate with the gains of the market, but not the loss. And how we do that is that you're capped at a certain rate of return. If the market does a little over that rate of return, the difference is going to go to the company. However, your money is going to stay where it is. But if the market drops, your money, you're not going to lose money. You're going to stay right there. And as the market continues to go up, you're going to go up with the market. But if the market drops, you're never going to lose money.
I love it.
So the other three are variable products.
Yes.
And those are subject to the market fluctuation.
Right. So to be clear, stock, variable universal life, and mutual funds are all subject to market fluctuation. I tried to throw a trick question in there. You know, I'm doing the best I can. All right. Okay. So how about number 10? You are required to go to. I had to throw this in there, Miss Baylor, because we just had the training a couple of weeks ago with your lawyer. So you are required to go to probate court unless you have one of these: trust, a will, a living trust, a holographic will, or a note from your doctor. Would you believe that there are people that said a will and there are people that said a living trust, but no one said a trust? The answer is a trust. You have to have a trust, right? So
Yes.
we'll definitely get people get your partner to come on and talk about that in detail. So can I get life insurance on anyone? Now I couldn't wait to read this one. So let me see what it says. I want to see what everybody thinks about this one. What does it say? Someone's just jumping back on. Okay. Let me see. Where am I at? I had to open the screen. Can I get life insurance on anyone? So the first answer is yes, you can get life insurance on anyone you like. They don't need to know about it. Some people said that. Yes, but only if you have insurable interest in that person. Most people answered that. No one answered yes. All you need to do is get their information and complete the application. So I'm glad no one said that. So the answer is B, yes, but only if you have insurable interest in that person. Ms. Baylock, would you like to discuss that?
And you have to get their information. Now, one thing we have a lot of people who are doing our $1 million baby policy where grandparents are purchasing policies for the grandkids. They can do it, but you still got to get the approval from the parents. The parents have to sign somewhere. And even if you're getting a policy for someone insurable, they still need to know about the policy. But you can still get a policy on anyone, you know, and like Mr. Tony said, if you have an insurable interest, yes.
Excellent, excellent. So there's one I wanted to spend a little bit of time on, if it's okay, because I keep hearing this question often. It's number 12. Ms. Baylark, I definitely would like for you to be able to touch on this. Do I have to wait 2 years for my policy to pay out if something happens to me? So the answers are yes, there is a 2-year waiting period on all policies. Some people answered that. No, all companies honor your policy as long as the premiums are current. Most of the people answered that. And the last one is it depends on the company. Some require a waiting period, others do not, as long as the account is in good standing. What's your thoughts on that?
Well, it does depend on the company, but it also depends on the type of product you have.
Right.
Like the products that we have with the index, the IUL, you don't have to wait 2 years to use it. Perfect example, my brother purchased one, and after 6 months, he was diagnosed with prostate cancer, and he was able to use the living benefit. The only other time you have to wait 2 years, if it's maybe like a graded, or if it's a term policy, it just depends on the policy. So for most of ours and our our IULs, you don't have to wait the 2 years. Many of our term products that are convertible, you don't have to wait the 2 years. So it really depends on the company and it depends on the product.
Excellent. So Ms. Baylard, I threw a kind of a curveball question in there for question number 13. Since we do a lot of rollovers in the company, I wanted people to think about their current 401ks and their current employer-based plans. So number 13 says, can I roll over my 401k, 403b, 457, or TSP into a Roth IRA? Can I roll over my 401k, 403b, 457, or TSP into a Roth IRA? So the answers are yes, as long as you do not take delivery of the money from the financial institution. I don't know, or no, the employer retirement plans are pre-tax or qualified plans. A Roth IRA is a post-tax plan. What's your comment on that?
Well, if you have those plans, you have to be 59 and a half. You can roll it over after you're 59 and a half. It depends on the company you're working for, because if you leave a company, you can roll it over to a tax advantage account. Now,
Mhm.
some people get confused on the rolling over on the tax advantage account. You're still going to have to pay taxes on those deferred accounts.
Right.
However, while it's in a tax advantage account, your money is compounding, your money is growing. So the money that's growing in that tax advantage account is going to help offset some of those taxes that you're going to have to pay on the 401k.
Right.
But on those accounts, you still have to use them by 73 required minimum distribution. So even if you retire and you're not ready to retire, the IRS is going to come after you, right? So many people, those accounts are part of the market, which a lot of people don't realize. So they've lost money. So when you roll that money over, you're removing the money from the stock market, the volatility of the stock market. So you're able to continue to grow your money. And when they say when you can grow your money, you can grow it tax-free, because that money that you're going to get on your rate of return is going to help towards those taxes you're going to have to pay anyway. So that's the advantage of doing that. And yes, you can roll it over to an IRA, you can roll it over to a Roth IRA, but there are certain requirements to roll it over. If you're trying to increase your retirement, the Roth IRAs, there's a requirement. There's the limit, the income limit, and you can only put so much in every year.
Right. Well, what I was looking for in that question is most employer-based retirement plans are qualified plans, which means they're not taxed, right? They're all pre-taxed accounts. Roth, I wanted to specifically mention Roth IRAs because those are post-tax accounts, right? That means the money that's funding a Roth IRA is after tax dollars. So you can't roll over that money directly into a Roth IRA, again, like Ms. Baylark said, without doing some significant money changes. So I forget exactly, what is that, a 1035? But only
1035.
1035 to another qualified account. So a lot of you have those old 401ks, 403bs, 457s, TSPs that you might have sitting around somewhere that's, earning some interest, and you're no longer with those employers. You can roll those over, but they have to roll over into a qualified private account. So let's take a look at number 14, and we're on last two questions. We're ripping right through this, right? Number 14 is, how can I use my cash value life insurance like a bank? How can I use my cash value life insurance like a bank? So the correct answer is, I can use accumulated cash in my policy as collateral and take a loan from the insurance company. Ms. Baylark does a presentation where she talks about Walt Disney and how he did that. Can you elaborate on that, Ms. Baylark?
Yes, the interesting thing is a lot of people don't know that Walt Disney was built on a life policy. When he went to get money from the bank, get a loan from the bank, they would not give him the money. So he took the cash value that was in his life policy and started Disneyland. The rest is history. The same has McDonald's. McDonald's did the same thing. They took out money for their life policy for the key employee, which kept them going. And voila, look at McDonald's today. So the wonderful thing about, like I said earlier, the life insurance, it has a lot of functions now that it didn't have before, because you can use it as a key person. You can use it when we set up some account, especially for young people, if they want to buy a home. We're setting up money for them so that they have that goal for them to reach. So with the cash value life policy, yes, you take it out as a loan, but this is how it works. You take the money out, you're borrowing from yourself. But the key is, this is like being your own bank. You're borrowing from yourself, but the interest is a lot lower. However, while you're borrowing from yourself, you're still getting interest on the rate of return. So much of it kind of subtracts or balance out from each other. So, you're paying little to nothing for return, which is a lot better than going to the bank or a loan. So that's why we have a presentation. Matter of fact, I don't know, did we just go through that one with the life insurance awareness? Anyway, we have something that's called Be Your Own Bank, where it actually explains to you how to be your own bank. One of the families we talk about, everyone's heard about the Rothschild. That's how the Rothschild built their wealth. You know, they put money into an account, and if any of the family members wanted to borrow money, they had to pay interest on that account and pay that money back. But it left a legacy, it left the Rothschild's legacy. So that's one of the ways that you use your cash value life insurance. If planned properly, if you have a goal, we help you plan that to reach the goal.
Outstanding. And there's one last question that snuck in: is how do you achieve your retirement goal with life insurance? And that's where I was going to ask you if you can show them how to use the what if calculator, Miss Baylard. Do you have it? Okay, let me stand by, everybody, so she can share her screen, so she can show you this wonderful tool, so you can assess how you'll be able. Welcome everybody coming in. Thank you so much. All right, and you can share your screen whenever you're ready. Let me see.
Can you see it?
Yes, ma'am.
Okay, so how many people have heard about the what if calculator? I only see, okay, so I can only see the, so what a lot of people don't know, this is one of the tools that we use for our clients when we sit down with them, and we calculate based on a product or based on the rate of return and based on tax now, which you pay within the year, or we take tax defer, which a lot of people are in the tax defer with their retirement account, or tax advantage, and we give you an opportunity to show what it's going to look like depending on the type of instrument that you have. So achieve your goals. So here, achieve your goals. And so say for someone you want to put $250 a month aside. And say you're 35 and you want to retire at 65. So that's going to be 30 years. And an annual rate, now most of the annual rates for the banks are 2 to 4%. So I'm going to put 2% in for the annual rate. And then we're going to calculate, which is $137,873. Now that's just if you're saving, right? If you do the pre-tax and you change this to say 8%, which is a lot of our products, the combined tax rate, and this is for California, it's about 28%. And then we have to take inflation into consideration, because when a lot of people have gotten into their retirement accounts, they didn't calculate inflation. Inflation increases 3.2, 3.4% every year. For a lot of people, when they go to retire after 30 years, number one, they're in the tax deferred account. So when they go to retire, they not only have to pay the taxes, but because the rate of inflation has increased every year, generally they don't have enough to live on. That's one of the trajectory we're trying to change, because many people, once they retire, they have to go back to work. So we're going to do 3.2% for inflation, and then we're going to calculate, reset. Okay. So here has taxed earned, that's the tax now, will be $154,677. And that's putting $250 a month aside for 30 years. Then if we go to, something about my pre-tax. Okay. So The pre-tax is the same thing. Now, this is once you, the pre-tax is once you paid your pre-taxes. Okay, after you paid your taxes, this is what you're going to get. $139,733. Because when you pay those taxes on your 401k or 403b, you're paying on the harvest. So the more you're saving, you're going to be paying taxes on, right? So if you do the tax deferred after tax dollars, that means if you're putting money in, say you've already paid taxes for the first year, and say you want to put that money into a tax advantage account, you'll have you'll have $194,074. And that's a lot more, especially when you compare the two. The first year, you're just putting money aside, right? And that's not even taking inflation into consideration, but you got 154. But on those tax deferred accounts for $250 a month, you're only going to get 139,733 after you pay the taxes. The tax advantage are those after tax dollars that you've already paid. And so for $250 a month, you have tax-free $194.74. Kind of understand it? So, you know, the goal is, have we talked to our clients, you know, and knowing the difference between the tax, because there's 3 ways in which you pay your taxes. There's the tax now as the first one. The pre-tax, tax deferred, or tax later mean you're going to pay on the harvest. So you're not going to even get what you anticipated, right? But then on the tax-free, if you start making putting money into a tax-free account after you pay taxes, because we say you want to pay on the seed. So if you pay on the seed, then you put that into a tax-free, you're going to come out ahead. And if planned properly, you can continue to grow your money tax-free. And the way we would plan that, because we don't want the IRS, that's a 720 code, which will be the red flag that the IRS will come back to you and want to look at your taxes. So as long as there's a good plan for you and you're putting money in, you can continue to grow it tax-free. Any questions?
Yeah, I definitely would like to open the floor for questions, everybody. Anybody had any comments, questions? Let's see what you got. I guess we answered all of them. Miss Dorber, are you on the line?
Yeah, I'm here.
I know you. I know you had a question the other day. This is a wonderful opportunity for you to get that answer. Did you want to have it shared on tonight?
I don't remember those questions, but I do have a new question.
A new one.
We covered the advantages of doing IUL and how you can benefit. Are there any disadvantages? What are some of the things that we should be aware of when we're looking at this?
Well, the IUL is really set up for growth. So you have to keep your money in, because there's a misnomer. People think once they put their money in the IUL, they can take it out the next year. You can't. It's set up for you to grow your money over time. So you at least have to keep your money in there at least 5 years if you want to take that money out. And then there's a minimum that you have to take out. I believe it's $1,500. So if you're not overfunding it enough, you might not have enough money to take out on the account. But people have to remember, those accounts are established for growth account, to grow your money over time, because they're going to be compounding. And what compounding is that you're getting money on the principal and money on the interest. And how that's calculated, the higher rate of return, there's something called the rule of 72. So the higher rate of return on your money, the faster your money is going to double. So if you get something that's at like 8%, the rule of 72, say you take 72 and say you divide it by 8, your money's going to double every 9 years. So you want to leave your money in there enough for it to double, so you'll have more money. Other than that, it defeats the purpose of having the IUL. It is a saving instrument. And like I said, it is used for supplemental income. It's used for life insurance for your mortgage protection, for college planning, for charities. There's a lot of reasons that you can use that IUL. But as I said before, the goal is for you to grow your money. So it has to at least sit over time.
Yeah, so you recommend if somebody's getting it, they're not planning on taking money out, like you probably have to leave it for 8-9 years for it to grow. Maybe you can take a little bit, but really the objective is to leave it in there 10-20 years or whatever for it to grow and then take it out later. Is that what you're?
Yeah, I mean, and you don't have to use it 20 years. It depends on what your goals are, and it depends on how we're going to calculate your illustration. But now remember, with the life insurance, it's not just the cash value, but you have those the death benefits and you have the living benefits. And if you get sick, stroke, heart attack, blindness due to diabetes, you have a coma, aneurysm, you can't do 2 of the daily living activities like feed yourself, dress yourself, walking. That all encompasses cash value life, the cash value life policy. And the IUL is Index Universal Life, because I saw someone say, what's an IUL? It's Index Universal Life, and that's what that means. The index meaning because it's part of the index concept where you're going to participate with gains of the markets and not the loss. Okay. Did that help?
Yeah, that's very helpful. And another question I had was, does your premiums change over the life of the insurance? So if you get it when you're younger, as you get older on the IUL, is your premium changing, and is that set up front, or are you surprised by like the changes?
No, once the IUL is illustrated and the policy is issued, your premiums will stay the same. Unless you want to overfund it, you can put a little bit more money into it every year. The only time your premiums change really is if you're in a term policy, because after that term policy, either you don't have the policy or your premiums are going to go up. But once the IUL is established, the payments remain the same.
Okay, great. Thank you.
Mm-hmm.
So Ms. Baylock, we got a couple of comments in the chat. Ms. Holland says, if you leave money in an IUL long term, you will lose it. Ask the IRS. Would you address that for me, please?
Say that again.
She says, if you leave money in an IUL long term, you will lose it. You can ask the IRS.
Our IULs are coded by the IRS. And that's the reason why we can do this, because you will not lose money as long as it is planned properly and there's no red code. You can continue to grow your money. So no, you would not lose your money with the IRS. That's the beauty of the IUL.
We might, Ms. Holland, if what I'd like to do is see if we can set up, who invited you, by the way? Who invited you to the call? IUL never long. Okay, understood. Who invited? Okay, Tracy. Tracy, if you can set up a meeting with Ms. Baylard and Ms. Holland after this call, that'd be great. Because, one of the things, the main reason why I wanted to do this call tonight, and I appreciate Ms. Baylard coming on and the teammates for coming on. When you go online, you can find whatever you're looking for, right? Whatever misconceptions, whatever doubts, whatever negativity that you're looking for, if you're looking for it, you will find it. The idea behind this call tonight is so we can assuage some of those misnomers and give you the accurate information. And the information that we're sharing with you, you can audit it. We can show you exactly where the sources are coming from. And because we are the people that are working with these various financial institutions, when we sit down with you and we show you the illustrations and we show you the different options that are available, we want you to be fully aware of what you're going to be getting. You're not just going to be having a life insurance policy sold to you and then good luck to you, right? She mentioned earlier in this discussion that we do annual reviews. The annual review is to make sure that the current policy that you have is still what's protecting you and your family. If you have any life events, any changes in your life, you might have less need, you might have more need. So when we have the annual review, we can assess that. So even if you have an IUL for a long period of time, as long as you're having those annual reviews, you don't have to worry about your policy lapsing. You don't have to worry about your policy having any problems, because any adjustments that are needed, we'll be able to recognize those adjustment needs every year. So did anybody else have any additional questions? And I appreciate your comments, by the way. Info never found online, called IRS. Okay. Thank you for your questions, Tracy. Tracy's awesome. She's actually supposed to be the host, and you're great. Any other questions? Mr. Lee, I know you got a question. You know I'm gonna pick on you. You're on mute right now. I saw you talking to your wife during the presentation, so I know you're confabbing on there. What's I got 5 minutes to pick on you. What's the confab about?
No, it wasn't a confab. What it was, I'm just observing and listening and taking it all in. And, this is a different area for me. My wife is more knowledgeable than I am.
Mm-hmm.
So, in order for me to get there, I have to sit in like this. So I'm learning and listening, and, I will have more information to bring to the table later.
Well, one of the things I love about today in particular, today is my mother's birthday. My mother passed last year. She was a firm believer of life insurance. And this call is really exciting to me, because she kept trying to tell everybody, get life insurance, get life insurance, get life insurance. So, when she passed, we had a script to follow to the letter. She took care of everything. All I did was just follow her instructions. And another one of those instructions is making sure that people are educated properly. So this is a great opportunity for us to make sure, Mr. Lee, that you're getting the correct information, so you and your wife are set up. And you might not be equally yoked with the financial knowledge, but I promise you, together, you're going to be absolutely fine.
Yes, sir.
We do this call every week. Next week, Miss Baylark is going to do something, I don't know. So make sure you get in contact with the person that invited you to the call. We're going to be here every week on Tuesday at 5 p.m. Pacific, 7 p.m. Central Time, and 8 p.m. Eastern Time. Sorry about that, Eastern people, but we got to do it sometime of the day. Come on.
Can we interrupt you just a quick moment? I see Renee with her hand.
Yes, please.
What companies, do you have a list of the companies that deal with everything that we talked about tonight?
Absolutely. Actually, we do have that list, but I don't know if Miss Baylark has it with her right now, but I don't have it in my computer at the moment. Miss Baylark, I think that's on the Money Matters presentation that you have that list?
We can follow up with you, Renee, if you want that. Whoever invited you, we can kind of circle back with you.
Tony invited me.
Mm-hmm.
Yeah.
I have it.
Okay. Do you want to pop it on the screen right now?
Okay.
We actually have more than 20 companies that we're contracted with as independent contractors. These are the main companies that we are with. And what makes us special with other companies, because we are mission driven, we're part of Mission 1000. So part of Mission 1000 is to help 1,000 families in 2024, whether it's put protection in place or whether it's educate them. We focus on the average client, those that don't have 100,000 to buy a policy, but it's not a one size fits all. So when we sit down with clients and we do what you call a financial analysis or a personal financial checkup, we see where you are in your financial health. And based on that, we help you put something in place. And that's why we're able to offer all these different companies, because we will search around and we will look for the best product for you.
Okay, thank you.
Excellent. All right. So, hey, everybody, I appreciate it. That's our hour. I'm so grateful to all of you. Did we answer everyone's questions? Did anybody have any closing questions or comments? Ms. Norbert, thank you. I saw somebody. Who's that?
Mr. Lee.
Mr. Lee.
I just want to thank you all very much. I'm a pastor, so in the Austin, Texas area, and so I utilize a lot of people that don't have insurance, and so it's great demand to be able to sit in on this, to where I can start, sharing the knowledge with them and let them know don't wait until it's too late. So thank you all very much.
Be a part of the mission, Pastor. Be a part of the mission. That's
You
what we
know,
are.
Pastor, I can relate to you. I do this through career. I'm at work now. I'm a church administrator.
Okay.
And this is how I talk because it's so heartening when members come up and they don't have anything in place and they're looking for the church to help them. And the churches can only do so much, you know. And so one of the things we do workshops for churches just on the living benefits. We don't try and sell or anything like we do. It's a matter of getting the information out so that there are options out there. Because the biggest thing is you don't have to pay a lot of money for insurance, but at least you can put something in place like a final expense. So you don't have to do the GoFundMe. You don't have to ask family for money because family's going to run out of money. Everybody's trying to make it out there, you know. And many times people don't raise the money anymore. You know, they used to raise the money from family, but I've had families, they run short on raising money because, you know, people are short on their money. So, you know, we do that. So if you're interested in Mr. Tony doing the workshop for you, we're more than happy. We can do it on Zoom. You know, we can come to your church. One of the things that we are, when I said we're part of the Mission 1000, you know, we're looking for people to be a part of our mission as well. There's not enough of us that's getting that information out. You know, I'm about Black economic empowerment. And I'm about educating the Black and Brown community. There's an article in Forbes magazine from 2017, if you want to check it out. It says by 2053, Black net worth was going to be zero. And the last time Black net worth was zero was back in slavery. You know, so our goal is to change the trajectory and the mindset, especially in the Brown and Black community. And the only way we can do that is just get that information out there, let them know that they have options. And that's basically what we want to do. From the information, if they receive it, they want to do something, we're here for them. But basically, it's just to get the information out there so that we can start helping each other and our families.
Amen. Cassandra and Devon, get off. You got training starting right now. Bye-bye.
Thank you for the information. It was very helpful.
Yes, Ms. Dorber, thank you so much for joining us. And again, everybody, really appreciate you all joining us. Thank you, team, for inviting your people. Thank you, Mr. Lee, for being on. Miss Morgan for jumping on. 424-4871 for jumping on Diane's phone. Pastor Jay, Jacqueline. Jacqueline, we'll be starting with you right after me and Baylor get off. And Miss Moses, I'm telling you, Miss Moses was the first one on. So I think she's going to be the one hosting the meeting next week. Good job. She's a guest.
Jacqueline, go on and sign off to the other Zoom.
Yes, the time to go. So thank you all so much. I really appreciate you all, and I'll see you all next week. God bless.
Bye.
All right, have a good night.
Okay, goodbye. Good night.